Hey, my name's Charles Piralli, and I'm the wealth manager of our JMMB Investments. And today I wanted to take a quick look at the Trinidad and Tobago stock market. So the TT comp, which is how we measure the performance of the Trinidad stock market, is down about 2% year to date.
Does anyone know what comp is? No? If not, by the end of this video, hopefully I can help decode what this financial industry expert is talking about and what its comp is used for. Stick around and find out. Hi everyone, welcome back to my channel where we talk about investing in the Trinidad and Tobago stock market and all associated financial matters with the goal of getting you to financial independence. So as we normally do, I give a brief overview of my current stock portfolio. The value is showing as of today at 498,984. So over the last week, the value of my stock rose. There's currently an unrealized loss of 2,502. And of course, my estimated dividends for this year is still around 24,516. So what the view I have here is basically the year to date, and the red is it reflects my current stock portfolio, and the white line is the Trinidad market. What this line represents is an index of my stock portfolio, which basically is a reflection of the performance of my stocks. So, what are stock market indices? A stock market index is a statistical measure that represents the value of a group of stocks and is generally used as a gauge of stock market activity. It provides investors with an indication of how the baskets of stocks are performing over a period of time. So in my case, this red line represents the basket of my stocks and how it performs year to date. The stock market index is like a scoreboard for the stock market. It tracks the performance of a group of stocks and gives investors a sense of whether the market is doing well or not. So for example, imagine you're watching a cricket match. Instead of tracking every player's performance separately, you check the scoreboard and see how the entire team is doing. That's exactly what a stock market index does. In this case, for the stocks in the stock market. The Trinidad and Tobago Stock Exchange has two main indices, the Composite Index and the All TNT Index. The Composite Index tracks the price movements of all companies listed on the Trinidad and Tobago Stock Exchange. It is calculated using the current aggregate market value as a percentage of a base aggregate market value established in January 1983. Kind of like how the cricket team score depends on how many runs each player gets. Similar. This stock market indices, the value depends on the performance of all the stocks on the Trinidad and Tobago Stock Exchange. The other index, the All TNT Index, let it load up. The All TNT Index measures the price movements of listed companies that are registered in Trinidad and Tobago. The market value of non-sector companies and cross-listed securities are deducted from the current aggregate market value. The resulting total is then expressed as a percentage of all the TNT-based aggregate market value. It's kind of like the All TNT Index is like tracking only local cricket players and excludes cross-listed stocks that focuses on companies based in Trinidad and focuses only on companies based in Trinidad. So the Composite Index are all the companies on the Trinidad and Tobago Stock Exchange, The all TNT index is a subset of that, which is just the local companies, and it does not include the cross-listed companies like Grace Kennedy, for example. So why should investors care about indices? This all matters because using index and looking at the performance of an index is a very useful tool for investors. They help track the market just by showing a quick snapshot. So, for example, if I go to the composite index, and I go year to date, I can see the index has been slowly declining since the start of the year. So, this gives a general picture that stocks have been undervalued and not performing as well since the start of the year. Indices help investors compare their portfolio performance, like I did at the start of my summary. So I can compare the index of my portfolio versus the Trinidad and Tobago stock market. So as of 26th April, currently my holdings are at 0.2% performance. Yet the Trinidad and Tobago stock market, which is the composite index, has fallen 2.1%. So I can now compare the performance of my stock portfolio using my portfolio index versus the stock market performance using the composite index. Indices also help reveal market trends. It can tell if the all Trinidad index is climbing or if the composite index is declining. They also provide a benchmark for investment funds. So if I go to another investment fund, you'll see that, for example, there's a Trinidad index fund, and it will compare the performance of that fund versus the composite index to see which one is performing better. So, in a nutshell, the composite index is the best measure of how your portfolio is performing as compared to another fund or to the market. And this is a valuable tool that investors use when determining how to structure their portfolio.
This continues on to a prolonged period of negative sentiment, which started all the way back in 2020 and persists up to today. On the fundamental side, though, earnings as a whole have been growing on the TT exchange, with the index currently sporting a price multiple of about 10 times and also offering a dividend yield of close to 4%. So for investors that are looking to add to their portfolio or new investors that are looking to get their feet wet for the first time, the current environment in the market provides a very attractive opportunity for you to do so.
Charles Piralli also mentions that the Trinidad and Tobago stock market index currently has a price multiple of approximately 10 times. What is he talking about? He's referring to what is known as a PE ratio. The PE ratio, or otherwise known as price to earnings ratio. The PE ratio is a valuation metric that compares a company's stock to the earnings per share. So let me repeat that. The price to earnings ratio is a valuation metric that compares the company's stock price to its earnings per share. When applied to the stock market index, it reflects the aggregate price of stocks within the index relative to the aggregate earnings. But what does this PE ratio of 10 times potentially indicate? A PE ratio of 10 times can suggest a couple of things. In terms of valuation, the PE ratio of 10 is generally considered to be relatively low compared to the historical averages of stock markets. This might suggest that the Trinidad and Tobago stock market, as represented by the composite index, could be undervalued at present. The lower P ratio might also indicate lower growth expectations for companies within the index compared to markets with higher P ratios. A lower P ratio could also reflect higher perceived risk associated with investing in the Trinidad and Tobago stock market. This could be due to various factors such as economic conditions. There's an election coming up, so political stability or instability. As Charles Piralli suggested in the video, a lower P ratio coupled with growing earnings and a dividend yield that is close to 4% could present an attractive investment opportunities for those investors seeking value. My experience has been purchasing TNT stocks while the market is down gives investors a unique opportunity to buy quality companies at a low price. Coupled with growing returns, this will increase the dividend yield. And unlike the US stock market, most of the returns I've experienced on the Trinidad and Tobago stock market comes from those steady dividend payments and not the capital gains. Let me repeat that. The unique thing about the Trinidad and Tobago stock market is that the bulk of the total return, when you're investing, you're looking at the total return. And the total return of a stock that you invest in has two components, the capital gain and the dividend. In the US, the US market, stock market is a high growth market. So a large part of the total return comes from the capital gains and not the dividends. That is why if you go on YouTube, you will realize that some people say dividend investing is a waste of time. But that cannot be used in the Trinidad and Tobago stock market because you can see here on my own stock portfolio, the dividends far outweigh the unrealized capital gain, loss in the capital gains. So for the Trinidad and Tobago stock market, the bulk of the total return actually lies in the dividend payment because our market is severely undervalued. And that is due to a number of factors. One of which is that the public itself don't really actively participate in the Trinidad and Tobago stock market. So if we had an active market, a lot of the good companies' prices, stock price would be much higher than it is right now. So I hope this is clear for everyone. To sum it all up, the composite index tracks all the listed stocks in the Trinidad and Tobago Stock Exchange. The All TNT index focuses only on the local companies on the stock market. These indices helps investors to track market trends and to compare performance. So going back to the post from Mr. Pirelli, he's basically saying that the composite index is down for the year at the time of his post. It's down 2%. And based on the PE ratios and the increasing earnings of the stocks on the Trinidad and Tobago Stock Exchange, now is a very good time to invest as a lot of the stocks, the high earning stocks, are at low values. And that's a wrap. I hope this post provided you with some insight and knowledge in indices, stock market indices, and I hope to see you next time. Take it easy.